Well, good morning, everyone. Today we're going to do something a little different. I've been getting amazing. I'm talking amazing feedback from these videos. Sometimes the comments, sometimes I'll get 5, 6 emails a day, sometimes even more. But the feedback has been phenomenal. And over the last few months, we've been getting a lot of questions. So today, instead of doing market analysis, I figured I would take the time to thank all of you for giving me amazing support, growing our YouTube channel, growing our site, growing our business. But most importantly, I want to answer some questions. And I picked really good questions and I put some thought into this. So I want to answer these questions for you so that you have a good perspective of what's going on and get a little more value out of these videos. So this is going to be a Q&A of 3 good questions that I picked. So the first question is, what sector do I think will perform over the next month and why? That's a great question. I believe the utility sector is going to outperform over the next few months. Why? Because markets are becoming defensive. Let me show you something. This should be eye-opening. If you look at momentum levels, and I've been showing this to anybody who would listen to me, and if you look at the S&P right now, you've got the highest percentage, or it was up to about yesterday or the day before, we had the highest percentage of stocks trading above the 200-day moving average that we've had in 5 years. That's right. This is a 5-year chart. This is the number of stocks, and we're now at 80. We peaked at 83% of stocks in the S. So that means 83% of stocks in the S&P 500 were trading above the 200-day moving average. Whenever you see that, it tends to pull off. Also, we've got stuff going on with China. We've got stuff going on with trade war. We're only in phase 1 with China. The bottom line is the markets are increasingly, the large caps are increasingly vulnerable, and I believe they're going to pull back. We're going to pull back to the 200-day moving average, and whenever that happens, utilities, which is the most defensive sector, tends to lead. I don't think the next few months, I don't think the first quarter or the fourth quarter, with earnings being mixed, with a lot of volatility, with a lot of uncertainty, with the impeachment of Trump, with China, with Iran. There's too many things going on to get a clear picture, and earnings are not expected to be really good till next quarter, till the first quarter of 2020, which is actually time-wise the second quarter of 2020. We're always a quarter back. So I do like utilities. They are the strongest sector right now. They're outperforming the stock market, and it's a defensive sector. So for the next month or two, I would stay fairly defensive. Now, you don't have to trade utilities. There's other sectors like transports, material, but I do believe utilities is going to be the preferred sector till about March. I think March things will start shaking out. We'll know where we're at. So the next question was, or is, can you walk through why you shorted XLE? It was a great call. Actually, it was a put, but it was a call. But I want to better understand your process. And we started shorting it on the 16th of December, and we're still short, actually. We started shorting it right here. Yep. So let me show you. First, the first thing we do is we look at relative strength scans. We look at the top 10 sectors to determine which sectors are leading and which are lagging and falling down. And around December, the relative strength, as you can see, the 200-day moving average is going down. The main trend is going down. Price penetrates 200-day high and then comes back down. It happened here. It happened here. It almost happened here. It almost happened here. This is called the twilight zone, whenever we're between the 200-day and the 50-day. But whenever we go above the 200-day and the trend is down, that's telling us that the price action is moving in the direction of the short-term trend and against the long-term trend. And the lowest risk opportunities you will ever get, assuming relative strength is moving your way and the trend is moving your way, is against the short-term trend and in the direction of the long-term trend. Long-term trend is obviously down. The majority of the trading action is below the 200-day moving average. The majority of the trading action is actually even below or near the 50-day, but it's clear that this trend is down. We waited. We got a confirmation with relative strength being in the bottom 3. So out of the 10, it was either 8th, 9th, or 10th place around this time. And then we waited for price to touch the moving average. And then we figured next few days it's going to curl back down and move in the direction of the trend. This is a perfect example of me using relative strength and some discretionary technical analysis to put us in a position in the direction of the main trend against the short-term trend. And why do I say the lowest risk opportunities exist in the direction of the trend against the main trend? Because the main trend fizzles out and turns back into the main trend. So the short-term trend fizzles out and turns back into the directions of the main trend. So if you're trading against the short-term trend, you're always trading in the direction of the long-term trend. And you see, if you put an entry right here or right here as we did, and if this continues going higher, you'll know if you're wrong right away because price action will remain above the 200-day moving average, which it did here for about, let's see here, for about a week, and then it folded. And that's why we gave this trade at least 2 weeks, because just a few days is not enough to see it. This is noise, and then it reverts back. So again, there's a good lesson here. This is actually a really good lesson aside from why we chose this trade, but this is a good demonstration of trading in the direction of the long-term trend and against the short-term trend. This is 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 the short-term trend. Always trade in the direction of the long-term trend. But if you trade against the short-term trend, you will enter and have a lot more low-risk entry opportunities. Because if you're trading in the direction of the trend and you enter here and it goes against you, you got to figure out, you got to wait for it to go all the way up here, come above. It's too much. But here you'll know within just a few days, and your risk is much lower here than if you're entering here or here or here. And incidentally, I believe we're still short this position because relative strength keeps going lower and lower and lower. And by the way, the price of energy of this sector did barely, when we had this little mini Iran trade war a little while back, there was a blip on the energy sector. So we knew that energies and oil is really, really weak right now. Because if a war in Iran or a bombing of Iraq and Iran, this whole thing that happened with Iran and Iraq can't get oil to rally, then what's going to make it rally? So again, those were the major decisions for the short position in the energy sector. Last question. I want to get into trading options. Do you have any good book recommendations? Boy, I got too many recommendations, but let me give you a story. I'll share a story with you, and hopefully this will help you. So when I started trading options, I'm an all or nothing kind of guy. I go deep. We didn't even have the internet, or internet was just barely alive. So I went to the local bookstore and I bought this book, Options as a Strategic Investment, 5th edition. Now, I don't know if you've ever seen this book. It looks very benign. This book is like this fat. I think it's about 1,000 pages. I don't know here for sure, but I've read this book. I've read this book several times, and it's like it's a Bible. It's a Bible. All right. I think he had one that was called the Bible of Options. The bottom line is this book is like, I'm not kidding. It's this fat. All right. So it's extremely overwhelming, and it talks about, it's like the encyclopedia. It talks about everything you could ever imagine in a very clear sense. The problem, and again, the problem is, by the time you read this book, if you can get through it, you're totally like, you don't know what strategy you want to try. It doesn't give you direction. It exposes you to so much about options, but it doesn't give you a clear direction. So you end up walking away after reading this book thinking, all right, now I know everything about options, but what do I actually do? So let me give you a better recommendation, all right? Again, I don't remember exactly how many pages it is, but the book is this fat. It's a great book. It's something I highly recommend you read if you have a month in jail or are going up to the mountains for a month and you want to kill a month, or you want to just try to fall asleep. It's a good book. And all jokes aside, it's an amazing book, but it's really technical. It's got a lot of strategies. And God bless Larry McMillan. He's an amazing teacher, but he's very, very technical. The guy who wrote this book, he's a legend. He's one of the greatest option traders, analysts of all time. Look him up. He's amazing. The guy is amazing. But boy, oh boy, this book is something else. So what I recommend for most traders, and I actually have this book, and I pulled it out a few times. It's a simple book. It's like simple, like 150 page. It's like this fat. It's got all the general stuff you need to know. You don't need to get into anxiety reading this book. It's not going to make options complicated. It's going to make it really, really simple. And it's a great book to just kind of peruse once in a while if you want to learn something quick. Here's what I'm going to tell you about options. All right. I'm going to tell you this. I've told this I'm not going to get into this long story, but I'll explain it to you. The best way to learn options is to follow them and actually look at how they trade. And also, all of these books, I'm going to tell you right off the top of ignore what they say about implied volatility. It's very complex, and they make it look like if you have a pricing model, you can buy underpriced options and you can sell overpriced options. And yes, in theory, all of that works fine. The problem is the markets are too quick to assimilate value. So what happens is options that are really cheap are there because they're not planning on going anywhere. They have no volatility. And if they're expensive, that means they're in play. For example, Amazon, Nvidia, Microsoft, Apple, they are always extremely overpriced. So everything you learn about implied volatility and how to save money by buying options that are undervalued and how to sell options that are overvalued, it's great education, but in reality, it just doesn't work anymore. Maybe it worked in 1982, but I'm going to tell you right now, if you want to buy an underpriced option, it's like buying an underpriced stock. It's a good deal, but you're going to hold that stock maybe 2, 3, 5, 6 years. So if an option is undervalued, that means no one's interested in it. And if no one's interested in it, that means you have to assume you know something that no one else does. When you start thinking that way in the market, things get really, really dangerous. All right? So those are my 3 answers today. We talked about what sector I believe is going to outperform over the next few months. We talked about shorting the energy sector and why I shorted the energy sector. And I gave you a good book recommendation for options. Now, like I said, I always read every email that you guys send in. Going forward, I'm going to make a point to publish all the answers to all of this. If you want to send me more questions, follow the link below. I'll answer your question and I'll respond to you live. What's better than sending in your question and getting somebody who has 26 years of experience to answer it live? Follow the link below. Let me know what you're thinking. I want to hear from you. Talk soon.